In this video, I want to talk to you guys about companies versus sole proprietors. Good day, my name is Heinrich Huvier. I'm the owner of SA Accounting Network. I've been in the accounting industry since 2008, and over the years I've helped many different people start their businesses. So in today's video, I want to chat to you guys about a topic that most people that's starting a business always is the first thing that we need to discuss with them is which business structure to use, whether they must go for a company or whether they need to trade as a sole proprietor. So in this video, I'm going to aim to answer some of your questions. So if you guys find value out of this video, then please remember to subscribe to my channel, like the video as well. And if you guys maybe need a new accountant for your business, remember to get in touch with us as well. We've got a network of many different accountants all over South Africa that can take good care of you and your business. So let me jump down to the presentation, then I'll show you what I've prepared for you guys today. So as I mentioned, the talk that I want to do with you today is companies versus sole proprietors, and basically just the differences and the different options that you have when you're starting a business. So I always like to tell the story of two cars. So let's say, for instance, we live in a small village called Fishhoek. It's down in Cape Town. So if I decide that I want to drive down from my house down to the beach, I've got a choice between two different cars. I can either take my wife's little 8-dos and drive with 8-dos down to the beach, or I can take my Honda Civic, and with a Civic I can drive down to the beach. Both of those vehicles are going to get me there. The one vehicle is cheaper than the other one, but the one vehicle has obviously got more risk than the other one. So if I decide that I want to go with the 8-dos, it is going to cost me next to nothing to drive down to the beach, but the risk, if something goes wrong, then the risk is that I might pick up probably serious injuries or anything like that. You know, if there was maybe an accident or something like that, where if I had to go with a Civic, then obviously the chances that I'm going to get that side alive is much better, and I've got a lot more protection. The disadvantage of the Civic is obviously more expensive than what it is with the 8-dos. And if you had to compare companies versus sole proprietors, there's a very similar concept between the two different business structures. So sole proprietor is basically the same as 8-dos. It's very cheap, but it's not really safe. Where a company, there's a lot more value and there's a lot more safety inside a company than versus a sole proprietor. So on the next slide, so I just wanted to highlight some of the key differences, you know, when it comes to sole proprietors and when it comes to companies, so that you guys can make a better informed decision of which structure to use. So the first thing that I want to touch on is basically the administration behind these two different structures. So the first thing that I said is easy versus complex. So what needs to happen is, if you trading as a sole proprietor, that you remember you're trading in your personal name. So the reason why I said that the administration is easier is that you're sitting with or working with one legal entity that you're working with as a sole proprietor. So everything is linked to you as an individual's name. So all the dealings, all the invoices, the bank accounts, everything that happens is linked to you as a person, as a sole proprietor. Where with a company, remember, as soon as you register a company, you're registering a separate legal entity. So that company has got its own legal status. So any contract that you take it out in the name of the company. If you open up a bank account, that bank account doesn't belong to you, it belongs to the company. So you, as the owner or the starter of the company, is basically appointed as the director of that company. So that is basically what you're entitled to. Remember, director is entitled to two things. They're entitled to take a profit or dividend out of the profits of the company, and they're entitled to take a salary. So those are the only two things that you, as the owner of a company, can take out of the business. Where sole proprietor, we're going to touch on that a bit later, but everything in the company is basically you. So you are the company if you're trading as a sole proprietor. So that's why I said it's much easier, the administration behind the sole proprietor, because you're only working with one legal entity. With companies, you've got two legal entities that you need to take care of. The next one I just mentioned there is bank accounts. It's worth a mention. So as I mentioned before as well, if you're a sole proprietor, remember that bank account is going to be in your personal name. Where if you're dealing with a company, then the company is going to have its own separate bank account. So you can have your bank account, companies can have its bank account. So whenever clients deal with you, they're going to be working and paying money into the company's bank account and not your personal one. Next thing that I mentioned over there is SARS returns. So what happens is, if you trade as a sole proprietor, all the income and all the expenses that you incur during the year needs to be declared on your personal tax return. So on your tax return, there's a section that you need to complete where they ask you whether you conducted any trading activities. You're going to mark the box here to say that you did do it. They're going to ask you how many trading activities you did. So if you're running one company, you're just going to put in one, and then on that section of the return, you need to put in your income and your expenses, and basically the profit that is left over is what you're going to get taxed on as a sole proprietor. Where with a company, the company itself gets its separate own tax return. So for a company, a similar thing, you're going to log into the e-filing profile. Then for the company itself, you're going to request a company tax return, which they call an IT14, and then on that return, you're going to fill in all the information for the company, so the income and the expenses, the profit. Then based on that, SARS is going to issue an assessment. So you as the director of the company is going to declare salary inside that on that return, and then on your personal side, you're only going to declare the salary part, you see. So the tax returns is a bit more complex when you're dealing with companies, but I think the risk, we're going to talk about risk just now, I think the risk for you as an individual is definitely less when we're working with companies. Next one that is also worth a mention when it comes to applications and forms. So remember, if you trade as a sole proprietor, you are the company. So whenever you put in any application form, let's say for instance you want to apply for tenders or for contracts or anything, you won't put in anything of a company because you're not registered as a company. So it will be your personal name, your personal ID number, your personal bank account, your signature on all those application forms. So there is actually a little bit of a risk if you go that route to trading as a sole proprietor, because it's all your personal information that you're putting on all the applications and all your forms. Where versus if you're trading as a company, remember it will be the company's name that will go into the forms, it will be the company's registration number, the company's bank account details. So your personal details doesn't appear anywhere. Where if you trade as a sole proprietor, then it's your personal details that will go into all those forms. So that is also worth just taking into consideration. The risks is the next thing that I maybe just want to touch on as well quickly. So we're just going to have a quick look at the risk when you're trading as a sole proprietor versus a company. So the first thing I said over there is the legal risk. So remember that if you register a company, you're registering a separate legal entity. So which means that if something goes pear-shaped and something goes wrong, let's say for instance you start a construction company and you build a roof and for some reason that roof collapses, then what will happen is if you're trading as a sole proprietor, you personally is the company. So what will happen is they're going to come sue you in your personal capacity because you are the company, where, or you are the business, let's put it that way, where if you register the companies, remember it's a separate legal entity. So you standing on one side, the company standing on the other side. So if that roof collapses and somebody gets hurt, then they're going to put in a claim against the company. So you as a person or as an individual has a bit more protection than what it would be inside the company itself. Because remember, it's a separate legal entity apart from you that's taking the risk. So I'm taking the construction thing as an example, but there's many different examples that you can take. If you've got, let's say for instance, offices and somebody works in your office, they trip over a cable and fall and they break an arm or a leg, then if you're a sole proprietor, they'll come after you. If it's a company, they will go after the company. So there's definitely a benefit there of trading as a company. And the next thing over there, I said SARS, which is quite a big one when it comes to risks. There's a little bit of a technical thing that we need to be aware of here. So if, let's say for instance, you have two businesses and or the same business, let's say for instance you're trading as a sole proprietor. Remember, and as I said just now, that on your personal tax return you need to declare the income less the expenses, and the profit that is left over is basically the part that you're going to get taxed on, you see. So now if SARS for some reason comes and they start disallowing expenses, so let's say for instance, let's blow up this figure and we say that you've got, let's say for instance, 10 million rand turnover, your expenses for the year is 9.5 million rand, which will mean your taxable income and it's going to be 500,000 rand. So now SARS can come and they can start asking questions about the expenses that you're putting onto your return. So if you say that 9.5 million rand is worth of expenses, and SARS can come back and they can disallow those expenses. So let's say for instance they can take 9 million rand worth of expenses away. Now all of a sudden you're going to sit with a tax bill in your personal name of about 3 million rand, which you don't want, because the problem with sole proprietors, and if you're trading your personal name, is you've got no backdoor. You know, SARS will come and they will come and sell your house, they will sell your cars, they will take your life insurance policies, everything to cover that debt that you basically owe SARS, and that is the risk for sole proprietors. And I think the other thing as well is they know, the receiver of revenue knows that most sole proprietors' administration skills isn't very strong. So they know as soon as they can start asking questions about expenses and that sole proprietor can't prove those expenses, SARS can disallow it, and then they can very easily generate millions and millions of additional tax just because the people didn't keep proper records. Where with a company, remember that the company itself is going to do its own personal tax return or not personal company tax return. Then on that tax return, you can have income and expenses and then the profit. So if worst case scenario, SARS comes and they ask, becoming ridiculous and ask a lot of stupid questions about your expenses, you always have that back door, because remember, the company is a separate legal entity. So you can always, if SARS becomes stupid, you can, if you really want, go and deregister that company, just put the thing into liquidation. They have to write up all the debt and stuff, and then you just start up a new company, and then you can continue as if nothing ever happened. So that is, I think, the two things with the receiver of revenue. I think this is really a big risk for sole proprietors. We personally at our practice, we try not to work with sole proprietors anymore, just because the reason is because SARS, like I said, just the stuff that they require from sole proprietors, I think sometimes is a bit unfair, where we just find that SARS, they are still strict, but it's not as strict when it comes to companies. Yes, so that is what I wanted to mention about risk. UIF and workman compensation, so there is also a bit of a risk. Remember, you as a sole proprietor cannot, for you as the owner of the business, cannot register yourself for UIF to claim benefits if something had to happen to you. And I think with this whole COVID thing that we went through was a very good exercise, and it's a very nice thing to go through, because if you are a company, you can, as the director of the company, register for UIF for yourself, and same with workman compensation. If you get hurt, you can list yourself as a director, and then you are covered by workman compensation. You see, so if, let's say for instance, we're going through another lockdown and we have to go claim UIF for people, you as the director can actually claim for benefits as well. Where if you trade as a sole proprietor, because you are the company, they say sorry, you cannot be covered by UIF. And the same thing with workman compensation. You as the owner of the company cannot be claimed or not be covered by workman compensation. I remember probably about 10 years ago, we had a case of a guy who was trading as a sole proprietor, and he got hurt at a factory, and the workman compensation just said, no ways, you as a sole proprietor, you are not covered by workman compensation. So he had to pay all his medical bills out of his own pocket. Where if he was registered as a company, or back then as a closed corporation, and he was working as a member of the closed corporation, they would have covered his medical costs. So there is definitely a big risk when it comes to trading as a sole proprietor there. Limitations on finance. If you approach a bank and you want to borrow money, then and you've got the same company trading as a sole proprietor, or you've got it trading as a company, the chances are much better that SARS is going to approve your finance. If you are trading as a company, they see that the company, the way that the business is structured, if you're trading as a company, they see it that as a more legitimate way of running a business. Most banks normally frown upon sole proprietors. They don't think that it's the right way to run a business. So just give an example. I had a client maybe about a year ago who wanted to apply for a bond, and he was trading as a sole proprietor, and he only managed to get a bond of 80%. So he said under no circumstances would the bank allow a 100% bond if you're trading as a sole proprietor. Where if he had the same business trading as a company, and he is the director of the company, was taking his salary out of the company, the banks would have approved a 100% loan. So that's why I say that there's limitations on the finance when it comes to sole proprietors. And the next thing is BEE legislation. So there as well, if you're a white South African man or woman, then there's no way that you can get a higher level than a level 4 for your business trading as a sole proprietor. Where if you have a business and you let's say for instance you're a white South African man, but I've got black partners inside my business, and let's say for instance they've got more than 50% ownership, then I can automatically get higher percentages for, or high level BE level ratings for my business. So that is also something that's really important. Deregistration and liquidation. So remember, as a sole proprietor, as I said just now, you are the legal entity yourself. So if things go pear-shaped and your business folds, then you personally have to liquidate. So they're going to come sell your car, they're going to come sell your house, they're going to take all your policies and stuff like that, and you're going to lose everything. Where, if you're trading as a company and things go south, then only the stuff that's inside the company is affected. So you, as the director of the company, if you run the business properly, then there will be no effects for you personally. The company itself will liquidate, your name is protected, and you can just carry on. You can go look for work or maybe just start another company. So there's definitely a big risk when it comes to sole proprietors and deregistrations and liquidations. Next thing over there is the separation of business and personal. We've seen this over the years, and we saw it again now recently as well, where if people trade as a sole proprietor, the problem is that everything is inside one pot. So it's really difficult to see how much sole proprietors are taking out as drawings out of the company, because they use one account for everything. So they would take that one account, they would pay their school fees, they will pay Pick and Pay, they will do Wimpy, Spur, all that stuff will go through one account, and we're going to talk about that just now, where if you've got a company, remember, you as the director of the company is only allowed to take his salary out of that company. So end of the month, you will transfer a certain amount over to your account, let's say for instance 10,000 Rand or 20,000 Rand, and then that money is your personal account money, and you can spend it any way you want to. We're going to talk a little bit further about that in the next slide. So there's definitely a benefit if you trade as a company, because you can separate your personal and the business stuff apart from each other. So if there's questions, SARS come back and ask a lot of questions. They ask for bank statements, then they're not looking at bank statements. It's got a mixture of personal and business stuff. They will, if you've got a company, you can give them the company bank statements, and it will be purely just business expenses inside that account. So on this table, I just made a comparison between sole proprietors versus companies. I'm going to run through this quickly with you guys. So the first thing I said, risk. When it comes to sole proprietors, in my opinion, the risk of trading as a sole proprietor is much higher than what it is as a company. In the previous slide, I discussed that a little bit in detail. The receiver of revenue, remember, as a sole proprietor, there's only one return. For you as the sole proprietor, everything goes into one return. Where with a company, remember that the company itself has got to do its own company tax return. You've got to do financial statements for this, for the company itself. The next thing I said, banks. Remember, and as a sole proprietor, you only have one bank account. With a company, the company's got its own separate bank account. The next point over there, which I say separation of business and private transactions. As a sole proprietor, I said no, because you can use one account for all your activities, but I would recommend it. So even if you do trade as a sole proprietor, my recommendation is always to open up another bank account, so you can use the one that you use for trading activities, purely for business expenses. Then you transfer money from that account into a different account, and that different account is the one that you pay all your personal expenses. Because then if SARS comes, they'll ask for bank statements. If they look at that statement, it will purely just be business expenses going through that account. So with a company as well, I said that that the company's account's got to be purely for business purposes. If you do not do that, so if, let's say for instance, you use a business account, but you use that business card to pay for personal expenses, then there's a thing which they call a fraud risk indicator. So for them, it's almost like a red light that goes on at the receiver of revenue to say that the chances are that the owner of that company is going to try and hide personal expenses as business expenses. So that is a really big risk. You guys must be careful not to do that. You have to separate the personal from the business things. So there's two fraud risk indicators that SARS looks at. The one is if you use your business account for personal expenses. The other one is if you work with a lot of cash, because the problem is with cash, you can't prove what you did with the money. So if you can't produce slips for what you did with the cash, then SARS is going to make the assumption that you took the money for yourself, and then in your personal name, you're going to be liable to pay the taxes on that. And the other thing also with cash, which is a problem that they know a lot of people try and be scaly. They ask their next door neighbors for all their fuel slips and all the Pick and Pay slips, and then they try and put all those expenses through the business account. So I want to warn you guys, please be careful. Do not do that. Make sure that you separate your business and your personal. If you've got a company, that business account must purely be just business expenses. Once or twice a month, you transfer money into your personal account, and that money you can do whatever you want to. Finance is the next one that I said there, that for sole proprietors it's definitely more difficult to get finance. For companies, I said easier depending on age. So most finance houses, if you approach them and you want to get finance on a business, they say that they want a minimum of 3 years financial statements, and obviously the business has got to be profitable and the assets has got to be more than liabilities of the company. Otherwise, there's no way they can help you with finance. So if you're in year one, you just start a business out immediately and you go to the bank and say, listen, I want to buy a car, the chances are that they're just going to decline it because they say that the business hasn't got any history and that they can't prove that the business is profitable to actually repay those payments. Next one over there, I say deregistration and liquidation. As a sole proprietor, as I said, is really difficult because you have to deregister yourself or liquidate yourself. So you're going to sell your car and your houses and all that stuff to get out of it. Where with a company, remember that company is a separate legal entity, so you are separated from the business, so the business would liquidate, but not you personally. So the only thing we must be careful for is if you sign surety. So if you want to go get a loan on the name of the company and you have to sign surety, maybe your house or a policy, then they can still come after those assets that you signed off as surety. Future value. So this is also quite an interesting topic. I said for sole proprietors it's low and for companies it is higher. If you have a business and you're trading as that business as a sole proprietor, remember that everything is linked to you personally and you want to sell that business, and let's say for instance you can get R1 million for that business. If that exact same business was trading as a company, you'd probably be able to get maybe 1.5 up to 2 million rand for that same business. The reason why is because the business is separate from you yourself. If you're trading as a sole proprietor, remember you can't sell yourself. So everything that goes into that basket of the business, you basically have to physically take it out of your personal stuff to try and prove that this is a business, a separate business from yourself. Where as a company, you can build up a track record over the years, make sure the books are done nicely, and then when you sell your business one day, you can very easily get double the value of that business when you sell it one day. I said operating cost for sole proprietors is generally lower, where for companies it is generally higher. So just two things that I can think of just out the back of my mind quickly. The first thing is bank charges. I mean, there's something small, but it is something valid. As a sole proprietor using a personal account, so there will be one set of bank charges. Where a company, remember you have to have a separate account, so the company itself is going to have bank charges, you and personal name is going to have bank charges. When it comes to administration, end of the year for you as a sole proprietor, remember you only have to do one tax return for you personally. On that tax return, you must put in your income and your expenses on that return. For a company, you have to draft a set of financial statements. That financial statements will be used to compile the company tax return, plus you still have to do your personal tax return as well. So there's definitely double work and double cost when it comes to running a company. The credibility, we spoke about that just now with loans and stuff. So if you approach a bank, you say you want to borrow money, they ask you how you're trading, you tell them as a sole proprietor, then you definitely have a lower credibility with the banks than what you would have as a company. The next thing that I mentioned there is startups. If you start as a sole proprietor, it is a very easy, straightforward decision or thing that you have to do. You basically just wake up today and say, okay, now I'm starting a business. You start designing invoices and stuff. When you send it out to your clients, you use your personal bank account details. They pay it straight into your account. Your responsibility is to keep track of the income and the expenses. At the end of the year, those income and expenses need to be declared on your personal tax return. Where with a company, I say the startup is more complex because remember you have to register with SIPC. After you've done the SIPC registration, you have to register with e-filing to get the company linked to your e-filing profile. That company is going to get a company tax number. Whether you've got a sole proprietor or company, you still have to register for UIF. When you start employing people, you have to do a workman compensation and obviously value added tax if it's applicable. So the startup for sole proprietors is definitely easier than a company. So the next thing that I want to chat about quickly is, when is a sole proprietor more beneficial? I would say when you start up a new venture. If you decide that you want to go through the process to start a new company, you decide that some hobby that you are busy involved with, that you want to take this thing and turn it into a profitable venture. To register a company, plus the administration behind the company, probably going to cost you a minimum of about 3,000 to 5,000 rand per year as a minimum to start a company. So if you now go and you register a company, open up the bank account, incur the bank charges, get a bookkeeping system going, and after 6 months you realize, no, this thing isn't working, you haven't got time to do it, then you still have to file all the tax returns for the company. You have to go through the whole process to deregister the company. And currently it's SIPC. To get a company deregistered takes about 6 months. There's quite a bit of administration that needs to happen. Then after that, you need to go back to SARS as well to inform them that the company is also deregistered. So you're making yourself a lot of work if it's just a hobby that you want to just test the waters with. And that is my next point over here. So I say if it's a part-time money generating hobby, then you might as well just trade as a sole proprietor. So your responsibility once again is keep track of your income and expenses, because you have to declare that on your tax return. Cost saving on administration. So if it's a really small business, like I said, to run a company, the administration part of it is going to cost a minimum, I would say, about 5,000 Rand per year to keep a company open. So if you've got a hobby which is only generating 2,000 Rand per year, then there's no use to register a company, because the administration is more than the money that you're actually making. The tax benefits for low profits. So I did another talk on my YouTube channel where I talked about different tax rates for small companies. So if you trade as a sole proprietor, your taxable income, so the income less the expenses, if that's your only source of income, only once that amount exceeds about 80,000 Rand per year, that's when you start paying 18% tax. Where with companies, from the first rand's profit that you make, depending on a couple of circumstances, you have to pay 28% tax straight off the bat, unless you can qualify for a thing which they call a small business corporation, which I've done a separate video on as well. So there's definitely a tax benefit if it's your only source of income to trade as a sole proprietor, because of that benefit that you can get there. We can maybe have another chat about that at some stage, but that's just in short the tax benefits. The next thing I said over there that you must be careful for is switching over to a company is an issue. So let's say, for instance, you start a venture, you start something as a hobby, you start producing whatever it is that you do, and 6 months down the line, you decide you want to change over, you want to formalize this whole business of you, and you want to register as a company. So now you have to inform all your clients that you're changing the bank account details, you're changing the name because you're not trading in your personal name again. You have to let all your suppliers know, all your customers know, obviously with SARS. So there's always a little bit of an issue when people change from sole proprietors over to companies to get everything transferred over to the company's name, where you're not trading as a sole proprietor anymore. And I think in that is in short, just my short summary of talking about sole proprietors versus companies. If you guys have questions, please put it in the comments below. Once again, I would like you guys to like the video if you got any benefit from it, subscribe to my channel as well, and remember to share this video with your friends as well if you know of anybody who wants to start a business. Hope you enjoyed it. Yes, and we'll see you on the next one.